Good morning, everyone. Scott G with the Simple Trading Life here. Welcome to our live stream today. Let's get right over to the market and let me get everybody pulled up here on my phone so I can see your comments. Give me just 1 second here. And there we go. So I see we have a couple of you in here already. And anything that you want me to look at this morning while we're on for the next couple of hours, just let me know. As usual, we'll start by going over ES and then moving on to other things. So have everybody up on my phone here. Let's go ahead and start by removing the overnight session opening price, and let's put in this morning's opening price, which was $25.28. So we'll get that put in. We always do this so we know how price trades throughout the day. And if anybody is new, you'll see how I do it. I change it to a dashed line. I make it purple. And let's make sure we get the right numbers in here. And then you'll see it shows up on my screen. I'll extend it across. And there we go. Okay, so far, as you can see, we're about 12 minutes in. Price is still heading to the downside. And what we're doing here, good morning, Sonny. I see you there. What we're doing here is we're looking for it to at least come to this trend line right here. And this is, since we've been moving up the past few days, this is the upward trend line that price has been respecting. So we're just looking to see, is it going to respect this trend line again, or is it going to go below it? Okay, so that's what we'll be looking for here in a little bit. I have a level marked. Let me come across here. Okay, what I have is the bottom of this candle right here. Okay, we just got a tiny little wick there, but just had that level marked in case that alert went off. It would let me know that price was sort of starting to plunge. Okay, so we'll see what we do here. You can see price tried to go up, right, here at the beginning. Okay, that's their fake out, right? We talk about this on every live stream. The direction that they typically go first is not really the direction that they really want to go, in most cases, not all the time. See a bunch more folks joining us. Welcome. Nice to have you this morning. We're just getting started here looking at the market, and we're about 14 minutes in. So far, we're heading lower. And the areas that we're looking at right here is this upward trend line. And then we also have a support level at 24.8775. And what I'll do is I'm going to also set an alert just above. And if price starts to reverse and head back up, we'll know that as well. Okay, anybody who's new, I use alerts to let me know what's going on. That way I can also surf around and look at a bunch of different things. And we'll always know what is happening. Okay, so as I told my premium community this morning at thesimpletradinglife.com, we have both a free and a premium community. So check us out there, simpletradinglife.com. I told everybody that the majority of names this morning were gapping down or flat. There was almost nothing that was up pre-market, and that's what this number right here shows us. These are the advancers. And what that means, there's only 204 names that are currently higher than where they closed yesterday for regular trading hours. Absolutely, Sonny. We'll look at oil and gold, both futures. Okay? So that's what this number is. I kind of alerted my premium community this morning to kind of watch that, because the majority of names were going to be gapping down this morning. And so you want to look and see where do they open? Do they have room to run in either direction? Or are they opening right at a support or right at a resistance level? Okay, so far here with about 9 minutes to go, right now we're a spinning top, which is right back here at opening price level. So we've went up and we've went down, and right now we're just sort of flat. Okay, so let's look at a couple of things here. Sonny wants us to look at oil and gold futures. Okay, so let's go to oil first. All right, and as we can see, oil is continuing to plummet right here. All right, so we did catch some support right at our support level there at 2268. You can see the support right in through here. And then it just kind of fell off a cliff, and it's going down, and it's going right through the demand area, which we kind of expected, and those in my premium community know why we expect that. But that's something that is sort of reserved for them, but we sort of expected that it was going to go straight through this demand area. And where was the demand created? Let's come back over here. Okay, it was created right over here with our drop, base, and strong rally away. Okay, we have another level here that I really need to extend across. Let's do that right now. I just hadn't had time to do it yet. I literally, in a given day, I'm probably conservatively looking at about 75 to 100 charts per day. So sometimes I don't get to go through and extend these across on all of them like I should. All right, there we go. And then I need to set an alert at about 21:45 really. So let me get this set. And then I just put little notes in there, look to go long, but that doesn't mean that we will absolutely go long right there. It's just what I would be looking at. Now we can scroll back in, get a little better look. Again, this is oil futures. I have alerts set on the market, so if anything goes off there, we'll go right back to it. And you can kind of see here, let's go back. Okay, so here we dropped down, which created this base here. I'll come back over. We had a drop, base, drop, created supply. We bounced right here, and we should have, based on some of the criteria that we look at, we bounced, we went right back up to supply, okay, and then we bounced lower out of supply, right? Came all the way down here, almost got to the demand area, bounced back up, and we came over here, and then we kind of dropped, and when we entered over here, again, by some of the factors that we look at in the premium room in thesimpletradinglife.com, we kind of suspected that we were going to go right through this level, which we did, and now we'll be probably coming into another demand level here fairly soon. Okay, so that's oil. Let's look at gold. And let me see here. We got a few more people. Welcome, welcome. And hey, Sonny, give me the gold futures symbol, the exact one you want me to look at. And we always look at Tesla and Netflix, so we'll get to those here shortly. But go ahead and give me the gold futures symbol that you want me to look at. We're going to go back to the market while I wait for that. Okay, let's see where we're at. Okay, still, got it, Sonny. I'll look at it right here. We're still in a spinning top with less than 5 minutes to go. So if we end as a spinning top, that's an indecisive candle. Okay, a doji or a spinning top shows indecision in the market because what it's showing is there's a struggle, right? Up here, sellers are pushing price down. Down here, buyers are pushing price up. And that keeps you relatively flat. All right, but we have our alert set, so we'll come back to that. Let's look at gold futures for my man Sonny. All right, so here's gold futures. Okay, you can see we're right in between support and resistance here. And yesterday, and this was something we were looking at yesterday, gold was sort of forming a wedge here, and then it broke below, based, dropped, came back up to the basing area, and then has still just sort of been ranging along. You see this? Just sort of been ranging along. It's not doing a whole lot right now. In fact, I don't really see a whole lot on here that gets me excited about gold right now. Now, we've talked about this on a few live streams. Gold typically, now it hasn't been doing it lately, but typically it does the inverse to what the market does. So if the market's dropping, gold typically goes up. If the market's going up, gold typically goes down. But during this market correction, it's really been doing almost the same exact thing. So typically if the market goes down, it's been dragging gold with it, or vice versa. Now here, you see we're just sort of ranging, right? We're just sort of ranging. So let's see what it does. We can come back and look at it, but as of right now, nothing to get me excited about gold. Okay, nothing to really get me excited about gold going significantly one direction or the other right now. All right, so we just had an alert go off on oil. So let's get back over here. Looking a little bit at the bigger picture right now. Okay, so the bigger picture shows that we're in a pretty strong downtrend. You see this? So starting up here, which was 2 days ago at 3 p.m., ever since then we've been moving down with nice structure. And what we mean by that is lower low, lower high, lower low, lower high, lower low, lower high. Okay, that's what we mean by nice structure. Moving on the way down. So now we're down here, and I just told you a few minutes ago we were likely to get into this demand area down here. And I'll make the screen to where you can see it. There you go. Okay, so we fell right through that demand, and now we're down into another demand area. Okay, and as of right now, things are still pretty strong to the downside. That doesn't mean that we can't see a small bounce out of here. Let me shorten this up here, just so it's out of the way. I leave these on my screen because I can go back and look at them later, see which zones held, which ones broke, and then there's kind of some analysis that we go through to see if it made sense. All right, so you can see right here, we've got down in and we're bouncing a little bit out of demand here, okay, which is normal. However, as I just showed you, and let me go back and zoom out for you. As I just showed you, we are right in the middle of a strong downtrend, right? Strong downtrend. So will we get a significant bounce out of here, or will we get something like this right here, where we just put in some structure and then head lower, right? That might be the more likely scenario. Okay, something like this might be a more likely scenario right now. But we will definitely keep an eye on it and see what occurs. All right. Okay, got a few more people. Welcome, everybody. And if you are new here, welcome. Please give us a thumbs up and like and subscribe to our channel. Definitely turn on the notifications bell, and that way you'll be notified every time that we go live. And let's see here. For whatever reason, Thinkorswim is freezing up. Interesting. This is why I stopped using Thinkorswim to trade. I only use it for charting now because of little things like this where it just freezes up. Okay, here we go. Okay, get back to the market. This is Apple, excuse me. Let me get back to the market. There we go. And again, none of our alerts have went off, so we know it's not doing anything significant. And as a matter of fact, as you can see, we're still flat. Right? So we're still flat, and we're right here at opening price level. So as of right now, nothing to do on ES. So now we'll start go through and look at some names. I know Sonny wanted to look at Netflix and Tesla. So we'll start with Netflix. Okay, so here we are on Netflix. And if we scroll backwards, you'll see here where we came and we bounced out of demand, right? We came down into this demand zone. We never got all the way through it. We bounced up out of it. Excuse me. Right up to supply. This is what you like to see right here, zone to zone movement. Okay, and we know, again, by some of the things that we look at, we know that this was highly likely to occur. All right. Our analysis would have told us that this was highly likely to occur, that we would go zone to zone, definitely clear this area right here, which we easily did. Then when we got up here, let's see, where's our first touch? Okay, so our first touch was over here. Here was our second touch. We kind of bounced down a little bit. We really didn't get too low. And then we went higher. We went right up here to this resistance level. You see that, how it respected it, poked its head through, respected, sold back down to the 200, which would be a common support area or resistance if you were coming from below. Then we went up to the 20, we respected the 20 for a while, poked our head up, and now it's kind of coming back down a little bit. So let's take a closer look. So here's where we ended yesterday, gap down to right here, flush down all the way to this support level at 353.34, caught support, bounced back up, and right now we're flat. Okay, so similar to the market, right? The market put in a doji on that first candle or spinning top, you know, sort of similar right here, and then just sort of flat. All right, so that's Netflix, and then Tesla. All right, so Tesla, the interesting thing with Tesla, and I'm kind of curious to see what it's doing this morning. Okay, so far, gap down and it's going lower. And the reason I said it was interesting, I saw that they themselves, Tesla, put out some negative news this morning. They are being more negatively impacted by the coronavirus with production than they anticipated. All right, so they put that out there themselves. But I also seen where they got an upgrade this morning. One of the analysts upgraded them to a buy and gave them a price target of 800. So you kind of balance that, right? Tesla itself kind of gave some negative news, and an analyst gave an upgrade, so I was interested to see what it was going to do this morning. So far, it's gapped down. I'll come in a little bit closer here. Okay, so far, here's where it ended yesterday. We had this big gap down. It sold down to here, and right now it's just kind of flat. All right, so we've got this gap here, from here to here. Excuse me, to here. Got this gap, and it poked its head up at the beginning and then pushed down, and then right now just kind of flat. And you can see here you got the 20 SMA starting to curl down. The 200 is already moving down. These are simple moving averages for those of you who are new. Okay, I only use the 20 and the 200. We don't use them to trade. They're more of a visual on the screen. Okay, and we know that like the 200 will commonly be used by institutions, right? The 20, the 50, the 100, and the 200 are what a lot of institutions use for moving averages. But the 200 is the most watched moving average in the world. So we definitely want that on there just as a visual. Okay, so that's where we're at right now. And let me look at some other names while we're down here on my watch list. Let's look at Walmart. We'll see what Walmart is doing. Okay, so despite what others in the market are doing, look at Walmart, right? So Walmart actually gapped up, one of the few names that gapped up and is going higher. And it's going higher. So we had a gap up. It closed right there yesterday, gapped up, and then it's trying to go higher. Okay, now it could run into a little bit of resistance right in here. All right, so we'll see if it does or not. And then from there, you'd have the 200. Well, actually, you'd have your resistance area, 112.90. You'd have the 200, and then you would have this spike up and drop down, which would be right up in here. Okay, there'd be some resistance right up there, like where that wick is. So that's Walmart. And let's look here. We're just going to go back through and look at a few of these randomly. Okay, this is Twitter. Now Twitter, as you can see, gap down, and right now it's actually down, kind of flat, opened up right there. Okay, so it's sort of flat. I'll squeeze this in. Okay, here's where it closed yesterday, gap down, went up, flushed down, came back just like the market, and right now it's sort of flat. All right, so that's Twitter. Let's look at Roku. That one seems to be very popular with people here lately. And what I mean by popular, a lot of people have been trading it lately. Okay, here's Roku, gap down. Now it flushed down right here around the 200, came back, and now it's trying to go lower. So if we squeeze in on Roku, here's where it closed yesterday. Here's where it opened. Flushed down, came back, caught a little support here off the 200. Now it's trying to go lower. All right, so if you're somebody playing Roku, let's do this. Let's see what we would be looking at. Okay, so if we look to the left, that's what we always want to do. The first thing is it needs to clear this wick, needs to clear the 200 and this wick. And then if you look straight across, look, there's hardly anything over there that should slow it down until you get to the bottom of this candle or this support area at 80.96. Okay, so if you're somebody playing Roku, those are the things to keep in mind. If you break through here and clear this, right, you would look for more downside down into this area. If it starts to reverse and it gets back above this hammer here, okay, then you would start to look for upside. And where would that upside be? Well, the first area I would look for is kind of right in here. All right, why? Because we had a little basing there. We kind of dropped, based, and then dropped some more. Okay, so I would look for a little bit there. That's if you take out the top of this hammer. And then you also have the 20 SMA. Okay, so that's Roku. That is Roku. Let's look at Shop. We have no alerts going off on the market right now, so I'm just going to go ahead and go through some names while we see if the market's going to do anything. Okay, Shop. Here we go. This is where it closed yesterday. Gap down, went up, went down, ended up right here at our 422.69 support area, and it's just sort of hanging out there. You see this? We talk about this a lot. About 80% of the names, sometimes more, are going to do exactly what the market does. Now, obviously, their prices are going to be different, but the movement, okay, the movement will follow what the market does. So as you can see, most of these names we're looking at are doing exactly what the market is. Walmart was the exception, right? Instead of gapping down, it gapped up and was going higher. So sometimes the easiest way to find things you might want to trade or you might want to watch is on a day like today when almost everything is down and very few things are advancing. You find those ones that are advancing, that might be a name that you watch or like to trade, and then you kind of figure out why. Okay, why is this name showing so much strength when the market was down and when everything else was gapping down? Okay, so here we are, we're on Regeneron. So Regeneron gapped down and it went up strong. Okay, this is what we talk about a lot in the Simple Trading Life community. It's all about where they gap it to. Okay, so it gapped down right into support. So no matter what, it made sense that it was going to get some sort of bounce out of there. Okay, because of where they gapped it to. And it did. It got this big bounce. Okay, now it's pulled back just a little bit. And it's just sort of, right now, just sort of hanging out here. I mean, it could start to retrace. This may end up as a resting candle and it tries to go higher. Now, what we mean by a resting candle, we'll do a quick little lesson here for those of you who don't know what I'm talking about. Okay, so we had this big wide-ranging green candle. If this candle would end as a doji, a spinning top, or something with a small red body in the upper 25 to 30% of this candle, that ends up being a bullish signal, then you would look for the next candle to take out that high. And if it does, you could go long and look for a scalping opportunity that would be similar in magnitude to this candle. All right. We call that a 3-candle pattern play, but it's a scalping technique. All right. And again, we're giving you a hypothetical. This may retrace down here. We're saying if this candle ends as a spinning top or a doji up in the upper 25 to 30% of this candle, and then the following candle takes out the high, that's where you would enter with a nice tight stop, and you would be looking for a similar move as the size of this candle. Similar. Okay, so the body on this candle, 446 to 454. Okay, so it was about $8.80. So if that happened, and again, I'm just giving you a hypothetical, trying to give you a lesson here. If that happened, if this ended as, say, a spinning top, and then we took out the top here, you would be looking for this candle to have a similar move as this candle. Maybe a little bit less, maybe the same, maybe slightly more, but similar in magnitude. You also have the 200 right up here, which would make sense, right? If we took this out, a similar size candle would probably bring us up close to the 200. All right, just something to keep in mind. Okay, let's, while we're thinking about it, let's go back and just kind of see what the market's doing. Since our alerts have went off, we don't think it's been doing much. And no. Okay, so we're still, you can see right here, we opened with a doji. Okay, then we've poked down, we've poked up. We're a little bit above opening price level. That's this purple dashed line. Okay, so again, just not a whole lot going on with the market. All right. I'm watching your comments in case anybody needs me to look at anything in particular. Let's look at a couple of Forex names, because we do trade Forex in here, several of us. Okay, so here's the Aussie CAD, the Aussie Canadian. You can kind of see here the movement we've had. Okay, it came up in to supply. I haven't adjusted this yet. It should be back here. Let me do that for you. Again, I look at so many things every day that it makes it hard for me to keep up with every single adjustment. There we go. So once it was tested, then we cut it off. Okay, so it tested, and let's see here. Yep, so it tested, came back here, caught support right at a support level. So the three things that we trade in the Simple Trading Life community, first and foremost, is price action. Okay, the second thing is supply and demand, okay, which is our pink and green zones. And the third thing is support and resistance. All right, and you can see here when it bounced out of supply, it came right back to our support level. Caught a bounce, came up, came down again, caught support at our support level. Then it went higher, and now it's higher high, higher high, then it made a lower low, lower high, lower low. Then it came back up here and made another higher high, which tells us right now we have no confirmed direction. No confirmed direction on the Aussie CAD right now. Okay, we would confirm direction if we got lower low, lower high, lower low, lower high, so on and so forth. Then we know we're trending down. But right now, because we came back and actually made a higher high, then we made a lower low, and now we're coming back this way again, we may actually be expanding the range. Okay, and what we mean by that is, let me kind of give you an idea here. All right. And then if I come down here, all right, and then I'm going to extend this one just so you can see it better. This will give you a visual of what I'm talking about. Okay, this is what we mean by expanding the range. See where we were? So we came down, we came here, we bounced down to here, then we bounced up to here, then we bounced down to here. Now we're climbing again. This is what we mean by expanding the range. Okay, we also call this a broadening triangle. So maybe everybody can see that. You can draw these in on your charts when you see something like this start to occur. And sometimes, especially, so let's just say we come up here. Let me squeeze this down a little bit. Okay, let's say we come up here and we catch resistance and we start going lower, right? Well, then that tells you, that's confirming that this range is continuing to broaden. Then you would look for it to come all the way back down here, right? Now, will it happen smoothly? No, not necessarily, right? Let's just say it does catch some resistance up here. It may come down and then come up a little bit and then come down like this, okay? But then it would eventually get to the bottom of this range. And then if you caught support there and start heading back up, you could look for it to get all the way back up there again. All right, now that doesn't go on forever, right? So that's why you mark them, you watch them, it'll happen for a while, and then if it breaks through one or the other, okay, then that's pretty much over. Okay, so let's just say, I'm going to make something up here. Let's say you come up through here and you break through. Then I would definitely leave this line, because what frequently happens is you'll come back and retest it and go higher. Same thing down here. You know, if price were to break through down here, okay, typically what will happen, I would leave that line, is it would come back, retest it, and go lower. All right, price likes to come back and retest zones or ranges or levels that it breaks through. It likes to come back and retest them and then go. Okay. All right, so this is Aussie CAD. Let's look at Euro USD. I'm just going to flip through some random Forex names. Okay, GLD. Hang on, I just had an alert go off. I have alerts set all over the market, right? All these charts that I look at, especially if they're ones that I sometimes trade, I draw in my zones, I draw in my levels, and I set alerts. Okay, so why did my alert just go off? Okay, because we just got to a demand area. Let's take a closer look. Okay, why is this a demand area? Okay, mostly because of this huge gap away. See this clear up here? All right, that shows us there was all kinds of aggressive buyers in this zone. And we have a little, and when I say little, it's little. There's a little drop, nice base, that's a good base. Then we rocketed away. Okay, and as you can see, that was our first touch. This one didn't actually touch, and it's already bouncing. It's already bouncing. And by some of the factors that we use in our room, it's highly likely that we're going to see a decent size bounce away from here. Okay, will it happen at this exact moment? We don't know that, right? We don't know that. I mean, it can come back here and try this again, but what are factors that we use to determine if something is a good trade or not? We have several of them. They're sort of lining up that this should eventually head the other direction and give us a decent move. So we'll pay attention to that. That's why my alert went off. because this is our first touch of this demand, and we have immediately bounced up a little bit higher. All right, and those that are in my premium community, they already know some of the things that we're looking at, why we say it's likely that this will probably bounce and move the other direction. Okay, if I remember, we'll come back and look at this a little bit later. Let's do this. I'll even set an alert up here, which would let us know if price starts to head upwards. Okay, I'll just put that up there, and if this alert goes off and we come back to it, we'll know that we got a pretty strong bounce out of there. Okay, so let's go back and look at EURUSD. That's what we were going to look at when the alert went off. All right. Okay, so EURUSD, I remind you of this every time. It's the most popularly traded instrument in the world. Okay, more people trade EURUSD worldwide than anything. Okay, sometimes those of us who live in the United States, we get caught up in stocks, and we think like Apple and Google and Amazon and things like that, and we think of them being like the most heavily traded instruments. EURUSD is the most heavily traded instrument in the world, in the entire world. And Forex, and more people in my community are adding Forex to their portfolio. I don't trade it exclusively. It's just one of the things I trade. I trade equities. I trade futures. I probably trade futures. Oh, I shouldn't say probably. I trade futures more than I trade anything else. Then probably Forex, then equities. But Forex in general is traded way more worldwide than the stock market. It's not even close. Okay, but here in the United States, we sometimes get into that mindset, right? We're only thinking about our little bubble. We think that the stock market is what everybody trades. That's pretty much just here in the US. Okay, worldwide, Forex is traded, exponentially more than equities are. Okay, currency trading. Okay, so here we are. We broke through here, and I haven't adjusted this yet, which we expected. Let me bring it back over. Okay, and we had a lot of momentum to the upside, and it was increasing when we got here. That's why we kind of expected that it was going to break through. Okay, then we kind of ranged sideways. We went up right here. Look at this. We went right up to a resistance level, and we've been selling off since then. Okay, lower low, lower high, lower low, lower high, lower low. Now, as long as we don't come back up here and get above these wicks, it would be another lower high, which means that we should continue down. All right, what do we have below? We have the 200, which is sort of starting to trend up. Okay, so as price action continues to play out, it'll probably be somewhere over here. So if, let's say we get up here. Let's say we get up here to the 20 and reject, we would expect it to probably start to come down and maybe even catch support somewhere around the 200. Just depends. Okay, if we look to the left, see these two wicks right here? They would offer support. How do we know that? Okay, not only did they bounce off the 20, these long bottoming tails show us that right across here, okay, right across there, there was aggressive buying. Buyers thought this was an inexpensive area. They thought it was cheap. They found value there, right? And that's why it pushed it on up. Okay, you see this? Even here, another one. So as sellers keep trying to push it down, buyers just kept blasting it up. So if it starts to come down, right in here, these wicks and the 200, again, will probably keep climbing. Those would be support areas. Okay, I see we just had like 4 more people join us. Welcome. Nice to have you guys here. Give us a thumbs up and subscribe to the channel and click on the notifications bell, and then you'll always know when we're live. Right now, we're just going through some random things. We're going through a couple of Forex names. But while we're thinking about it, let's go back and check the market. Okay, we obviously have our alert set, so nothing dramatic has happened, or we'd already know. Oh, look at that. We're already back to a doji. 5 minutes to go on this candle, actually 4 minutes to go, and we're back to a doji. Interesting, right? Interesting. So far, the market's doing nothing, right? We got no movement out of the market so far this morning. All right, let's go back. We'll look at a couple more Forex names, and then we'll look at some more equities. Let's look at GBPUSD. This is another one. And we're going to look at GBPJPY too, because that's a really popular one to trade for Forex traders. Okay, so here we are. This is GBPUSD, also known as the cable, pound dollar. And again, see the strong upward movement. Our analysis told us that we were likely to break through here. Now, we did get a bounce. Okay, we talked about this in the private room, I believe, yesterday. We did get a bounce, but our analysis told us we were likely to continue higher, and we did. We've continued much higher. Okay, so our analysis techniques are helping us make good decisions. Now, that doesn't mean that somebody can't take this out of here. Okay, I think we looked at this yesterday. 2001 down to 1932. All right, that was a $68, listen to me, 68 pip bounce to the downside. That's good, right? We would love that for a scalp. Okay, we would love that for a scalp. So that's not saying you can't take it. Our analysis is just saying that price is likely to go ahead right on up through here and continue higher, and it did. Okay, so you could get both of them, right? You could take this, or maybe even this one. I probably, if I would have taken a scalp this way, as soon as this would have started reversing, I probably would have got out. Okay, and then it continued on up, higher high, higher low, higher high, slightly higher low. Okay, higher high, then it made a lower low. So then that tells us, okay, start watching, okay, because now the direction of price, it's either changing or it's going to go into a range. Okay, as soon as we made a lower low after making higher high, higher low, higher high, higher low, higher high, higher low. After we made those and then we finally make a lower low, and then we made a lower high. Look at this, lower than this. Okay, so that tells us that price is either going into a range or it may start to change direction. Okay, and GBPJPY. All right, so I'm going to go backwards a little bit because this is one we talked about yesterday. And as you can see, our analysis proved out. Okay, so what we said yesterday, and this was in the private room, is that price was forming a wedge. All that means is that the range is tightening. So if you guys who were on here from the beginning, we showed you that one where the range was widening, okay, creating a bigger range, expanding. Here it's showing us that the range is tightening. Now what that means typically is that when it breaks out one way or the other, you're going to get a pretty decent move. And so what did I say yesterday? Let's watch, and if it breaks one direction or the other. In here, in the Simple Trading Life community, we don't try to guess. Okay, we don't say, hey, we know it's going to go up or we know it's going to go down. Okay, what did I tell you yesterday? Those of you who were in the private community, what did I say? I said because we were coming on an uptrend, when you form this, the books tell you that you're likely to continue. Right? And we did, okay? But that doesn't happen all the time, and we don't want to guess. So it broke out, and when it broke out, it came back and retested. You see that? Broke, retested, and then went higher. Just what we talked about a little bit ago. Happens all the time. Okay, so from where we broke out and retested, that was 132.12, and it went up to 133.76. Okay, so we got well over 100 pip move. I mean, that's like 164, if I'm doing my math correctly. That's a big move, right? Okay, so if somebody sees that, you have that drawn in, we break, we retest and you start to go higher. Now I would tell my traders you enter right here at the top of this. Okay, we got the break, the retest, the confirmation of the go, of the break, retest, and go is when you take out the top of this right here where we retested. Okay, so I would say you enter right there approximately, which is 132.40. And let's just say you took it up here to this resistance level. That would be 130 pips approximately. Pretty good move, right? And how long did that take to play out? 31 hours, 32 hours, 33 hours, 34 hours, 4.5 hours. 4.5 hours for 130 pips. Okay, so just to put that in monetary terms, one standard lot, you'd be looking at 1,300 bucks. Half of a lot, okay, be half of that, 650. Quarter of a lot, so on and so forth. Depending on what size you play, in 4.5 hours, just playing one standard lot would have got you 1,300 bucks. Okay, does that make sense? And let's just look at some other names. Let's go back and we'll see what gold is doing, which is GLD. I'm talking about the ETF and not the future. Okay, so far it's bounced out of there and it's just sort of flat since it bounced. It went up to the 20. Look at this. Okay, went up here. Then it came back down. So now we'll see, is it going to retest it again? Okay, is it going to retest it again? We don't know. We don't know. Okay, actually, yep. All right, there we go. Okay, so we'll keep an eye on it. We'll keep an eye on it. I actually was incorrect. I was saying we're expecting it to bounce. We're actually expecting it to not get too big of a bounce based on our analysis. I was just not reading it correctly at the time. So we are actually looking for it. It may get a bounce. It came back up to the 20 here, but we're not looking for it to get too big of a bounce based on our analysis. All right, so we will keep an eye on that. Let's look at Google. Let's look at Google. All right, so here's Google. Big gap down, and it's went lower. Okay, here's where it ended yesterday. Here's where it opened today, went up, caught some resistance at the 20, flushed down, just like the market did. Okay, then we went doji. All right, we had an alert on the Swiss yen. We'll go there in a minute. Formed a doji, and right now we're just sort of inside of this doji. And what we mean by inside is we haven't taken out the high or the low. Okay. This is one where if you took out the low, I would be a little bit more inclined, because then if you took out the low and you took this out, you could be looking at getting down into here, which is this big wick right here. Okay. And it is trying to move down. Okay, we look for things from a price action standpoint to sort of line up in a diagonal. And then you look to the left, where would be your next area? Well, it would be this wick would be our next obstacle. Price could reverse anywhere in there, but let's just say it took this out and then took that out. That would give it a little bit of momentum. It could probably get down in here then before it would try to catch a bounce. All right, that's price action trading. So we'll come back to Google here after a bit and see. Let's do this. Let's set an alert just below this wick. And if this goes off, we'll know that price is trying to move lower. Okay. Let's look at IWM, which is the small cap ITF. So this is the market, but only the small caps. We got our gap down and it's flat. Just like the market, right? Gap down and flat. Okay, it's going a little bit red, and look at this. It's a really similar pattern to what we just saw in Google, which is definitely not a small cap. Okay, look, almost identical to what we just saw in Google. So if it takes this out and then takes this out, we look to the left, right? We look over here, and then this would be your next obstacle, the bottom of this candle. Okay, right there. That would be your next obstacle. Or if you're scalping, okay, maybe a take profit. Okay, Sonny, I see your comments there. He's playing Netflix and Tesla. Yeah, I think everybody's waiting for the market to pick up momentum, right, Sonny? Okay, so he wants to go back and look at Netflix. Let's do that. That's what we're here for. I'm here for you guys. So if there's something you want to look at, you just let me know. Okay, so here we are. Netflix trying to go higher. We put a hammer in right here. That was our opening candle. Okay, it pulled back a little bit, but you can see it never took out the hammer. It hasn't cleared the top of it yet. Okay, hasn't cleared the top of it. It's trying to go higher. Had a little hammer here though. Never mind, I'm sorry. Had a little hammer here. So if you take the top of that out, you can try to take a scalp up to here or up to the very top of this candle. So this would be like your T1 right here. Let me make it a little bit bigger for you guys. Okay, so here's what we're looking at. Here was opening candle, which was a hammer. We went inside, which means we didn't take out either high or low, formed another hammer. This is like a doji hammer. Now, when we took this out right here, from a price action standpoint, you could scalp and you could look to try to get up to here, right in here, which would be your T1 or your take profit 1. Take profit 2 would probably be right around the top of this candle. And I always give 2 targets. A lot of the traders who trade multiple contracts, or if you're trading 1,000 shares, I'm just making a round number. Okay, you might take, if you got up here, you might take 500 of them off or 750 off, and then you leave some for a runner to try to hit your second target. Okay. So right here was your second hammer. It was inside. It never took this out, never took that out. But from a scalping perspective, you can enter there. And you look to, for your T1, you'd look to get out right before the top of this wick. For your T2, we say the top of the candle because you don't want to get up into the wick and risk having it bounce back down on you. A couple of the members in my room had that happen to them in the last day or two where they were heavily green on a scalp and they went a little bit too far and then price quickly reversed. Okay, they could have, I'm just using this as an example. If this was their target, they could have got out right there and it went up a little bit higher and they didn't get out in time and it quickly reversed on them. And then you go from green to nothing, or you only make a little bit of profit, or in the worst case scenario, you go green to red. Okay, so that's Netflix. And Sonny, wishing you the best, and hopefully you get what you're looking for out of this on Netflix. Okay, I said we had an alert go off, and I never did look at it. I'm sorry, because I wanted to look at Netflix for Sonny. So we had an alert on the Swiss yen. Okay, and I think my alert was to tell me that it was like absolutely plunging here. So let's get a wider view. Let's kind of take a look from a bigger perspective. All right, you can see, okay, what price has been doing here. Okay, following my cursor, up and down, and now we're starting to plunge. I think I had an alert set like right here, which would let me know if it was starting to plunge. And I have to drag across our next demand zone, which I have the alert set. I just haven't drawn the visual across yet. 111.901. Okay, so let me draw this across. 111.901. All right, but I do have the alert set. If it gets all the way down there, that'll let me know at that time, look and see, does it make sense to go long? All right, so that's why I have these alerts set all over on equities, on futures, on Forex. I have zones drawn, I have alerts set. and then that helps me to take only the highest probability trades. So we've been on for almost an hour, and you can see I've already had like 3 or 4 alerts go off. And this is what I try to tell the people in my community, in both the free and the premium community. This is how you become a more consistently profitable trader. You go through and you're constantly drawing in your zones and setting alerts, okay, watching price action in places that you see a potentially highly probable trade developing. Then every day, if you set enough of those alerts go off, you go there, you then do some more analysis and you decide, okay, is this a trade I want to take right now? Okay, but that's how you become consistently profitable, because you're already starting to identify the high probability areas. Okay, yes, I will revisit Tesla right now, Sonny. Let's do that. Okay, so here's Tesla. Again, it's where it closed yesterday. Here's where it opened, flushed down, come back up, a little bit of a green candle. Let's come on over. All right, and that was an inside candle. Okay, meaning inside of this zone here. It never took out this low. Okay, the low of this candle was 494.02. The low of this candle was 494.23. So it never took out the low, inside candle. Okay, now what somebody's going to look for here is taking out the low or the high. The low or the high. So far, this is an inside candle of this. All right, so from a price action standpoint, there's really nothing to do yet, right? Yet, if you were aggressive, I mean, it's not something I would probably be super interested in, but if you were aggressive, if it took out the high here or the low here, okay, you could try to scalp up, but you'd be going right into this wick and into this. See that? All right, so you just want to be careful. If you were going down, let's look to the left. Okay, if it took out the bottom, then you look over here, you've got this wick that you need to get below, which is in conjunction with this wick. If you got below those two, you could really easily drop right down here. Really easily. So let's come back over. Okay, so Sonny's asking for targets. I was just kind of giving them, Sonny. Let's go back and look. Let me make it easier to see. All right, so if somebody's looking to the upside, if they took this out, right? You know, you could be looking like up in here, you know, maybe the 507.87 for a scalp. If you took this out, I wouldn't look too much higher for 2 reasons. We've got a decent sized topping tail and we have a gap, right? So gaps typically act as resistance early on. Okay, so that would be a target to the upside if you took this out right here. Okay, because anytime you get into a wick this size or this size, at any point it could start turning the other way. Then to the downside, we just have to squeeze it in again. To the downside, if you took out the bottom, so if you took out the bottom of this, you would look at this as probably your first target because you'd have to clear this wick, right? And this wick is almost in line. If you took this one out, you're probably going to take that one out because you'd get a little bump. Okay, so this would probably be a T1 to the downside, this wick right here. So somewhere around 490.70. And then if you got below there, let's bring it up. Then if you got below there, it should pretty easily fall down to around this 476.75 area, right? There's really nothing here to slow it down at that point. So that gives you some targets there, Sonny, on Tesla. Okay, nothing, Sonny, you're going to take your own trades, and I understand that. Nothing there really excites me right now. I would be more excited to the downside, okay, but we're not really getting the types of signals that we know are the super high probability ones. Okay, just keep that in mind. If you're already in something, okay, that's perfectly fine. But you know, right now we went inside. This candle's inside here, and so far we're still inside this one on our current candle, right? So you know, this isn't like a hammer or a shooting star or something like that. You know, that's not something that shows us, okay, we were green after red, okay, just not for me. I'm just telling you for me, and you know I'm conservative, Sonny. There's nothing that really excites me here. But if I had to choose, if somebody was holding a gun to my head and said, you have to pick which one you would like better, I would like it better to the downside. Only because of what we see here, right? Okay, so if we cleared this and we tried to scalp, we already know here is our obstacle, these two wicks, and if we got below them, we could really start to drop then. Then it would be highly likely that we get down in this area. Okay, you're welcome, Sonny. You're welcome. Okay, we haven't looked at the market in a little while because none of our alerts have went off, but let's just go back and see kind of where we're at. Okay, again, not doing a whole lot. Yeah, we're moving down. Okay, this was our opening candle, a doji, right? Indecision. Second candle, right? We tried to go up, but it couldn't do it. Okay, third candle, which was an inside candle. Third candle, we are trying to take out the low of this, but then we still got to get under this wick. Then we also have this trend line coming up. Now, this trend line doesn't necessarily mean anything. I want anybody who's new to understand that. It's a visual. Okay, this is just showing on this upward trajectory that the market's been on the last 2 or 3 days. In the past, this trend line has been respected. So I'll show you. Let me show you. Okay. I don't even know. Yeah. Yep, it'll let me get back far enough. Okay. So coming back to here, we kind of went up, came back, bounced off of it again, and now it looks like we're coming back. Now, do we bounce again? We don't know that, right? This is just a visual. That's all it is. So if price comes down and we bounce again, then we start looking back here. Well, what happened here? When we bounced here, we had a pretty nice move, right? Then we came down, we bounced again. What did we have? A pretty nice move. So if we bounce again, okay, in our heads, we can say, all right, let's start looking at some more upside. But again, that doesn't mean that we're trying to predict out and say, okay, well, we're going to go to, you know, based on these last two bounces, we're going to go to, you know, 28.15. I'm just making this up, you know, because it is a resistance level. You know, based on this bounce, and then based on this bounce, if we do the same thing, or maybe you're going to say you're going to get to 27.21. All right. We don't like to predict like that. But what we are watching for is to see, are we still respecting this? And if we are and we start to bounce, well then we can deduce that maybe we look for some upside, but we're still going to trade price action. We're still going to find reasons to get into the market. And you can counter trend trade, right? You can counter trend trade as well. We trade both ways. Okay, there's a little tighter look. Let me do this. Okay, so here's where we're at. We're just doing a whole lot of nothing right now on the market. Now, as you can see, on some of the Forex names we've looked at this morning, some of them are moving like crazy, right? So, you know, maybe you're trading in Forex today. And right now, until you have a reason to do something, you're not really trading equities or futures. Well, not all futures are not moving. I'm not saying that, right? Let's go back and look at oil again. Oil's moving, right? Oil's moving. It fell off the cliff right here. Okay, that's just an expression. You see it? Just fell off the cliff. Okay, and right now, Again, we're in the middle of a demand zone, but we're not saying that it's likely that we're going to get any kind of a big bounce out of here. Only because we have factors that we look at in the Simple Trading Life community that help us to determine, okay, just like here, we said it was likely that it was going to go right on through there, and it did. Okay, now here, again, it's not very likely we're going to see some big bounce out of here. There's just too much momentum to the downside right now. Right now. That can change. Hey, Justin, good to see you. Derek, okay, got some new people joining us. Yeah, glad you guys are on here. Okay, just to bring you guys up to speed, market not doing much this morning. Equities, a lot of names except for Walmart, and we'll go back and look at that in a minute. A lot of names in the equities are not doing much either. Okay, gap down and then they're sort of flat. But in Forex, that's what we've been looking at. There are some names that are moving quite well in Forex. This is oil that we have on the screen right now, oil futures. And it's had a big move to the downside this morning. Currently, it's right here in the middle of a demand zone. All right, let's go look at Walmart. We have not looked at it since early on. And it looks like it may be reversing now. It is. Okay, so Walmart had a big gap up, went all the way up here, and now it's just selling off. Okay, so somebody may have been able to catch some of this morning, but I don't know. I don't know. But we know that early in the day, it was one of the few names that gapped up, but now it's coming back down to earth. Coming back down to earth, right? Because it's actually lower because it opened up right here. It's actually lower than opening price. Trying to catch some support at the 20. If it doesn't, it's likely to get down into this wick somewhere, right? And then if it would clear that, then you have 107.23 here as your next support level. All right, let's look at USCAD. We'll just look at some different names here. Okay, look at USCAD. Right now, it may be forming what we like to refer to as a slow curve. Okay, you see where it caught its support at a support level, right? These have been drawn in for a long time, okay? So it came down. This just means that in the past, this level has been respected, and it was respected right here at, 2 o'clock in the morning? Yep, 2 o'clock in the morning. 1:30, 2 o'clock, respected, and it's starting to work its way back up. Okay, so what is a slow curve? If you ever hear me use the expression slow curve formation, it's when price kind of rounds off like this and then comes all the way back up to around the origin of where it started. Now, the reason that's important to know is what frequently happens is one of two things. When it gets back up here, okay, if you just drew a line across there, when it gets back up here, let me just do it. And then that'll kind of help you guys with the visual. All right, when it gets back up to this line, one of two things frequently happens. It either sells off back down into this level, right, just sells off, or it forms a cup and handle. So it'll sell back down like this, and it'll make a smaller version of what you just seen. So the big slow curve becomes the cup, then you get a smaller version of that that becomes the handle, and then when it gets back up to retest this level, it frequently breaks up to its next area of resistance. That's why it's important to know these things, right? So when it gets back up into here, you're going to look for it to most likely reject there, either very violently, and it'll have a big move to the downside, or it'll come down and it'll make a small curve here, and then it'll head up to the next area of resistance. Okay, that's why it's important to know those, because those are highly probable trades. You can make good money on those. Justin said he actually traded USD CAD this morning. Awesome. Awesome. Okay, so again, from a bigger picture perspective, we're just going to, when we come back to these things, we keep these things in our mind, or you might want to journal it. Some people will write it down in a journal, or you don't have to physically write it. You could type it in to a journal and say, keep an eye on US CAD, looks to be forming a slow curve formation. And then you might even put like this level in right up here. You may say at 1.4253, if we get back up there, set an alert. Here, I'll just do it. I'm going to set an alert up here. I'll just show you how you do it. Set an alert and say if price, you have to excuse me guys, if price, I got a migraine coming on, so if my eyes look funny, that's why. If price returns to this level, look to go short. All right, set the alert. Now I have an alert. So if we get back up here at any time in the future and this pattern continued, right, I'll know what I'm looking for. I'll know what I'm looking for. Okay, let's see. Let's look at some things that maybe we haven't looked at yet. Let's look at NVIDIA. This is always a popular one. All right, NVIDIA. Okay, sort of ranging, right? Here lately, sort of ranging. We broke up through here, which we expected, came down, hammer. Okay, now let me squeeze in on this because I want to show you guys how we trade in the Simple Trading Life community. I tell you over and over again, we primarily trade price action, first and foremost. Look at this, beautiful hammer. And why I say it's beautiful, strong move down, we catch support, we form a hammer, price action tells us it's a highly probable trade that if you don't do anything until the top of this hammer gets taken out, then you look for targets. Okay, for me, my target on this trade, if we take this out, and that is 243.89, so 243.90, you need to clear this wick. It was at 246.10, so that maybe could have been your T1, right? That would have got you a couple bucks, but really, to me, I would have had a target right up here, just before the top of this candle, which is about 250, say 30, just to make the math easy. And look, we easily got there. We actually went clear up to here and then sold off. And then, look, you could have took it the other way from price action. All right, and then we formed a shooting star. You take out the low of this, then you put a target in. Where would your target be? This wick, all right? And that wick also coincides with the support level at 243.53. You easily made it. Easily. Oh, and then look what we did. We put in a hammer. You take it here, right? Now you know that this wick should be tough, so maybe cut that wick in half. Maybe cut that wick in half, and then you could try to play it up the other way. Now, you didn't as easily get up there, but you did get up there. Okay, you take that out, you came up here, you kind of based, and then right about there, you would have took out 50% of the wick. Okay, that is price action trading. And you would have made every single one of those plays for good money. So I try to tell the folks in my room over and over again, and I know they're starting to get it. They're starting to listen. Okay, so people are always asking me, well, what about this swing trade? And oh, you know, I got crushed because I tried to go long on X, and then overnight it dropped, and the next day, and blah, blah, and they go on and on and on, and I keep telling them, right now, I'm not interested in anything like that. You don't have to be. Look, you can take these kinds of trades 2, 3, 4 times a day and just let the profits pile up, and they're so high probability. They're so high probability. Why would you take anything else? Right? The only reason you would take anything else is because you're trying to outthink the market, which you'll never do. You will never outthink the market. The market will always win if you're trying to outguess it. Okay, but in these shorter time frames, okay, we're looking at one name. Imagine how many times a day on all the different names, on all the different instruments, on all the different currency pairs that this stuff occurs. Right? I'm trying to hammer it into the folks in my community. This is what you do. This is why I say trade price action first and foremost. You just let these things pile up. You just take these over and over and over again. You'll occasionally get a loser, but you'll have a nice tight stop and it'll be a small loss. But look, every one of these plays out just on NVIDIA over the last couple of days. That's one name. Imagine how many times it's playing out all across the market every single day. Every single day. Okay? I'm getting passionate about it because I want people to understand it. I want you to make money. Right? I want you to make money, and this is the easiest way in the world to make money. And why don't more people do it? Up here. It's not that they don't know what to do, right? Those in my room, especially in the premium room, they know. I'm looking right at them. They know. I drill this into their head like every single day. I put charts in the room. I show them where, hey, look, here it is. You know, if I see it in real time, I alert them. I say, look, here's a developing scalp. And I'll even give them the targets. So like if this would have been developing, meaning this candle was about to close, and I see it in real time, I would say, okay, here's your T1, here's your T2, go long right above here, boom. Take your profit and look for the next great trade. Okay, it just so happened on NVIDIA, the next great trade was right there. And your T1, I wouldn't have probably had a T2. If I did, it would have been clear down here. But, okay, it was highly likely you were going to get here. Bam. How much money was that? Low 250.69. So 250.70 is where you would have entered. You would have exited at 245.53. $5. $5 on NVIDIA. You'd make money on that. All right, so again, I get passionate, I get a little bit worked up about that because I want you guys to make money consistently, and I'm showing you. That's all you, if you did nothing else, but just take those kind of trades and just let your profits pile up, you would be wildly successful. Wildly successful. It's only between the ears, as they say, right? This is what keeps people from being successful. Why do 85 to 90% of retail traders fail? When we say fail, we mean lose money. It has nothing to do with their strategies. It might have a little bit to do with their strategies. Some of them have bad strategies. Okay, but the majority of the reason that they're failing is because of this. Their mind, their psychology. Okay, so I've shown people, and I'm not calling anybody out like in my community or even who might follow me on Twitter and all that, but there are people who I've shown this to over and over and over again, and they keep coming back and they'll say, oh man, I just got killed. I tried to go long. I'm just making something up. I tried to go long on SPY on Friday calls and blah, blah, blah. And man, and then the market tanked overnight, and now, I pretty much, I just lost everything I had in it. Why did you do that? Right? There was no reason to do that. The only reason you did that is because you thought something was going to happen. You thought something was going to happen. That's a low probability play, right? And I keep telling those in the SimpleTradingLife.com community, in this environment, there is no reason to try to guess about anything. Every single day, every single night, news can come out that can either make the market spike up or spike down significantly. You don't want to be on the wrong side of that. There's no reason to be, okay? All right, so here we are in the market. Again, the market is doing absolutely nothing. Here we are. We're just right at opening price level. See that? Here was opening candle, which was a doji. Okay, spinning top, spinning top. We're just not doing anything yet. Okay, and I would not trade this right here. Okay, even if it takes the top of that out, I'd be more interested if it took the top of this out. Hey Martin, glad you're here. Glad you're here, Martin. Martin is one of our regulars on our YouTube live streams. Okay, so I would be more excited if it took it out up here, but again, look what you have above. Okay, look what you have above. You got some area here. You got the 20. You've got a resistance level. You've got a little wick here on the top of this big red candle. Just things to keep in mind, right? Where are my potential obstacles? Where are my potential obstacles? Now, if you're just looking to try to make a quick, like literally quick buck, you know, you might say, okay, if we take the top of this out, I'll just try to get up near the top of this wick and I'll get out. Okay? For me, I know the premiums are way too high. Let's look at the premiums. Let's look at the premiums. Give me a second. I've got them showing all of the possible strike prices because if you are going to play ES, you sometimes have to go way far out of the money. Okay, so right now, okay, if you're playing options, $28.50 per contract. $2,850 per contract, $27.50 per contract. That's at the money. So what I'm saying is you'd have to go quite a ways out. Now you only have to pay half of that on ES. If you're playing SPX, right? If you're playing SPX, you pay the full amount. All right, but again, it's just premiums. Premiums are high because of the volatility. So you have to weigh that risk reward. All right, so we did take this out, right? So like I said, a little scalp would be just below the top of this wick, and we're almost there now. Let's just see if we get there. Not something I would be interested in, but I'm just saying if somebody was like desperate that they were trying to play a scalp, a little bit more. We need to get to 25.40. 25.40. And yep, there it is, 25.40. Okay, so you could have made that play right there. The high of this was 25.3275, so you would have entered at 25.33 and then had a target of 25.40, and you would have made a $7 move. If you're playing standard contract, that would be $350 profit. If you're playing options, it just depends on what strike you had, what you would have made. Okay, some strikes you might not have made hardly anything. Other strikes you may have made a little bit. Okay, now we're seeing, are we going to be able to take out the tops of both of these? Okay, we took this one out already. My alert is set at the top of this wick. Then we have the 20, and then we have the resistance level. So it is trying to go. It is trying to move. We'll watch it here for just a minute. And while we're seeing what it's going to do, any of you in here who are new, this is your first time, or you don't know anything about Simple Trading Life, go to simpletradinglife.com. That's our website. You can learn all about us. We have a free chat room and we have a premium room. We have both. So you could, if you want to come check us out a little bit, you could join the free chat room. We've got about almost 230 people in there. And then we have a premium room. And we do a lot more intensive stuff in the premium room. If you're interested in that, you can read all about it. And if you'd like to join, we do private live streams for them on Mondays, Wednesdays, and Thursdays at 9:25 a.m. right before the market opens. And then obviously we're on here for everybody on YouTube on Tuesdays and Fridays at 9:45 a.m. And then we typically stay on till about 11:45 or so, right around there, about 2 hours. But if you're interested in learning more about us, just go to simpletradinglife.com. Okay, so far hasn't been able to take it out. It got right up to it, but we have an alert there, so we'll see if it goes off. Let's look at AMD. I don't even know if we've looked at AMD this morning. Okay, AMD. Gap down. Okay, went up and down, and then it's been relatively flat, but just like the market here, just like the market's dragging it higher. Okay, so similar action. Had a bigger gap down, came up to the 20 and then was hanging out there. Now that the market has been going up a little bit, it's dragging it up as well. Okay, you see that. And what I'll also do is I go through these names. We'll see if there's any price action to note. If you're new in here, I trade and watch primarily the 30-minute chart. If there is a newer name, then I draw in my support and resistance levels. If we ever come across something today that doesn't have any, I'll draw them in for you, show you how to do that. I also have a video on this YouTube channel on how to draw accurate support and resistance lines. So, you can watch that. It's only like 2 minutes long because it's that easy. And they're super accurate. Okay, here we are on Apple. So Apple yesterday came up, okay, bounced off of supply, came down, then it kind of was moving like this, and at the end of the day, it just blasted up. Just blasted up to end the day. Gap down, has sold down. Let's get in a little bit closer. Okay, has sold down. Then we put in a spinning top right here that was an inside candle. Now that is something that you could look at scalping. Okay, an inside doji or spinning top that's an inside candle, because then you're just looking to take out either side. All right, so if it takes out the top here, which it did, where's your first target? Like right up here around in this wick somewhere, which it got to easily. See that? So there would have been a scalp. Let's look. The high of this was 250. So you would have entered at 250.40. And then you get up in here. I don't know if there was enough there. Not for me. Not for me. I wouldn't have taken that. Not enough reward. You really would have to get back up to around here to make it like kind of worthwhile. If you got up to the 20, you're talking about 252, say 252.15. So this was, you would have entered at 250.40. That would have got you almost $2. Maybe that's worth it. Okay, but Apple can move, right? Apple can move. So I don't know that I would have liked the reward to risk on this. Okay, just kind of showing you how the action's playing out. Let's look at Amazon. See what Amazon is doing. Okay, just like Apple did yesterday, huge run up into close, gap down, sold down to the 20. Then it kind of poked its head down. Now it's poking its head back up. Again, not a whole lot to do here. Not a whole lot to do here. However, I will show you this. Okay. However, what we are doing is we are forming somewhat of a wedge. Okay. So if you would see Amazon break up or down out of that, if you just drew a line here and maybe even drew a line there, or you could draw it off the corner here, either one, kind of forming a wedge, which means, again, the range is tightening. Eventually, it'll expand. Everything is inside of this opening candle. Notice that? Everything is inside of the opening candle range. Those are the things you want to pay attention to. Let's look at BA. Okay, so BA, they released some news this morning. We had an alert go off on the market. We'll go there in just a second. They released some news that they were not going to take the government's money. So I was interested to see, would that give them any positive impact? Obviously not. They gapped down, they went low, went lower. They did catch some support here at the 200 and they're still there as of right now. Okay, so they really didn't get any impact from saying they weren't going to take the government's money. All right, let's go back over here. I think what happened is we took out the next wick, I believe. So let's just see. TOS is just running so slow this morning. Yep, there we go. Okay, let's get in a little bit closer. Okay, so now we're up to the 20. Okay, so what we did is when we took this out, we went up higher, we took this out. Now we've taken this out. That's what keeps accelerating price up. Okay, here's your next one. If you can take this out, then you move over here. You try to take that out, so on and so forth. That's how you create big green candles. It'd be exactly the opposite to the downside. Okay, so right now we're right up here to the 25, 56, 25 area. And at the 20. So we're going to see, can we break through? Because if we do, if we can get above here, then that gets us over to here. If we can get above there, then we're going to try to take this out. Okay, it's trying. So we'll watch it here for just a second. That's why understanding candle structure is important. Those are just the basics, right? Those are basics. Understanding candles, understanding candle patterns. We only trade certain candle patterns because some are more probable than others. But understanding structure, what does a wick mean? What does a big wick mean? Okay, what is a doji? What is a spinning top? Okay, we know they're candles of indecision. What is a hammer? What is a shooting star? Okay, excuse me, those are either potential reversal or continuation signals, depending on where they happen. All right, now so far we're rejecting right here this wick and this resistance level so far. Let's went up to it, bounce back down a little bit. Okay, so we're going to see, does it have enough strength to get through there? Okay, but understanding candles, what they mean and what the different parts of the candles represent is important. That's just one of the, that's just like when you're learning your ABCs. You have to understand your ABCs before you can spell, right? You have to understand words before you can speak in intelligent sentences. And you have to understand how to write a sentence before you can write a paragraph. And you have to understand how to write paragraphs before you can write a story, so on and so forth. So that's where candlesticks come in. They're sort of like the ABCs or the small words in terms of the foundation of trading. So if you don't understand candlesticks and you're new, I would highly recommend, there's all kinds of resources on YouTube. Okay, just Google, or not Google, go to YouTube and in the search bar, type in understanding candlesticks, candlestick basics, candlesticks 101, anything like that, and just start to get a basic framework of what candlesticks are and how they work, and then you work from there. Okay, as you can see, we're still having a little bit of difficulty right here. And we've got a lot there. Remember when we were down here, I said, where were our obstacles? This wick, the 20, the resistance level, and this wick. And that's why I said, it could get a little dicey up in here. Okay, it's not saying we can't get through there. You're more likely to have trouble when you have several things all in one area. 1, this wick. 2, the 20. 3, our resistance level. So we have 3 things right there, and that's why it's stalling right now. Again, that's not to say that it won't go through here or can't get through there. It absolutely can, right? If you have enough momentum, we've already shown you today on other charts, and we'll go back and show you again. If you have enough momentum, you can get through anything. I think, let's go to oil real quick, because this is the prime example, right? From this morning. Look, that's a good, strong, let me come back across. Okay. Come back over. Oh. I apologize. It's just, Thinkorswim is just being such a stickler this morning. It's just not working very fluidly. Okay, so we come across there. We went right through it. Okay, because of momentum. Because of momentum. We just went right through it. Now we're in here. Okay, we're trying to bounce back out of there, but I told you before, not likely that we're going to make much of a bounce. Not likely. We're not even out of it yet. We're not even back up out of the zone. Okay, so if you have enough momentum, you can do anything. But in our community, and what I try to teach traders is you only want to trade probabilities. You only want to trade probabilities. And what do we mean there? If something's a higher probability versus a lower probability, is it more likely that you're going to get through 3 areas of resistance or 1 area of resistance? You see what I'm saying? Okay. It's not that this is impossible, but, okay, as you can see, so far, where have we rejected? Where we had 3 areas of resistance. 1, 2, 3. Okay, 3 areas. Coming up, we have 1 area, we got through it pretty easy. 1 area, we got through it pretty easy. You see what I'm saying? So probabilities, we always try to take those into account when we're making trading decisions. Is something highly probable or is it unlikely? Because if something's unlikely, then we don't want to do it. Or, like, we have whole lists of things that we look at. Okay? We have a whole list of things that we look at in trying to determine whether trades are highly probable or not. The more factors that you can put on your side that it's probable, the better the trade it is. If you can only put 1 or 2 things on your side, then it might not be the best trade to take, and you move on and you find the next one that is a highly probable trade. Justin Steve Nissen is perfect. Okay, I just recommended him in our room yesterday. So he is the gentleman who literally, when I say wrote the book, I'm being like sarcastic and literal at the same time. He wrote the book on Japanese candlesticks. So he was somebody who used to work, don't hold me to this, I want to say it might have been Merrill Lynch or something like that way back in the day, but he spent a lot of time over in Japan, and he learned, these are Japanese candlesticks. We just call them candlesticks, but they're technically Japanese candlesticks. He went over and spent time learning both the history and what they represent. Then he brought it back to the United States and kind of put it into a language that people could understand. And then he wrote books and books on Japanese candlesticks. And now, you know, most of them are older, but there's tons of his videos on YouTube. Highly recommend them. Okay, now, I don't recommend his trading strategies, but I do recommend what he can teach you about candlesticks. I don't use his trading strategies. Okay, I think they're, I'll just leave it at that. I just don't use his trading strategies. I think the way we trade is wins a lot more. You'll be a lot more successful. And he'll even tell you in some of the videos, he'll say, listen, you know, I'm more of an educator than I am a trader now. Now, at one time, he was a trader. He was like an institutional trader at one time. But he is one of the foremost authorities on candlesticks. So just Google Steve Nissen, Nison, candlestick basics. Or do that in YouTube. Put that in the YouTube search bar. Steve Nissen, candlestick basics. And just watch those videos and you will learn everything you need to know about candlesticks. Okay? All right, so here we are. We've got less than 4 minutes to go. And as you can see, this is where the difficulty was. We pushed down. Now we're trying to push back up. Trying to see if we're going to be able to get back up there or not. Let me do this. I'm going to put an alert just above so we'll know. Okay, so if this alert goes off, we'll know that we were able to break through there and go a little bit higher. All right, but again, you guys saw that in real time, right? When the candle was up here, this was all green. There was no wick. Then it rejected, and it rejected like way back here. Now it's trying to inch its way back up, but did you see where we rejected? It was highly probable that if you have 3 areas of potential resistance, that you're going to get some resistance there, right? Just makes sense, common sense. Okay, we haven't looked at BABA. Let's look at BABA. We'll come back to the market here in a second. Okay, BABA, here we go. Here's where it ended. Here's where it opened. It tried to go higher, got knocked back down. You see between the 20 and the 200. Went doji, doji. Now this doji, we would call a shooting star doji because we have this big topping tail. This is what we would refer to as a counter hammer, but it's a doji. It's a doji hammer. Okay, and why do we call it a counter hammer? It's countering this shooting star, right? You see this? It's countering it. And then what happened? This would have been a trading opportunity right here, talking about price action. You go high right here, and your T1 would have been just below the top of this wick. And if you had a T2, it probably would be the 20, which it got to and then rejected off of. Okay. For me, because I'm conservative, my target would have been just below the top of this wick. Why do I say just below? Because where are you most likely to reject? Right at the top of the wick. Where are you most likely to reject at the 20 if that's your target? At the 20. So if that's your target, you'd want to exit slightly before you get there because then you eliminate this happening to you. Okay, so again, at one time, this entire candle was green. Now look at it. So if you had that as, say, your T2, right, and you got right there, and then all of a sudden it rejects against you, you might lose all your profit, or a lot of it. Because when it's backing off quickly, if you didn't already have, like, say, a trailing stop behind you, when it's backing off quickly, how hard is it to get out? It's hard, right? It's difficult to get out when it backs off quickly. So you could go from being really green to very little profit or even going back to red or break even in just like literally a minute or two. That's how quickly it can happen. All right, but right there would have been a perfect scalp. This is a counter hammer. Okay, and my target would have been right there myself, just below the top of this wick. Let's see, that would have got a little over $1, right around $1. Okay, and then up to here, if you did have a T2, let me come back here. Okay, that would have got you a couple of bucks up to here, you know, so on and so forth. On BABA, that's pretty good. You know, that's pretty good, but high probability. That's all, high probability. Okay, let's go back now because the candle would have just changed. Let's look at the market. Back to ES. And our alert never went off because we never did get back up there. All right, So you guys just saw that play out in real time. Even when we were up here, okay, I said might be difficult to get through there, and look what we did. This is where we ended. This is not a true shooting star. If you took this body, okay, the wick is not 2 to 3 times bigger, but it obviously shows that we caught resistance up in here and sellers came back in and pushed it down. Sellers pushed it down. Sellers pushed it down. Now here in this doji, right here, buyers pushed it up. Okay, so still, we are still in this area right here of basically not doing a whole lot. Now it's trying to sell back down. Okay, so we'll watch it. We'll watch it for just a minute or so. We got about another 15 minutes that we'll hang out on here before we wrap this up. We've got time. I'll tell you what I'll do. I'll put an alert. I'm going to move this one up. I'll just put it right up under here. Okay, so if this alert goes off, we'll know that it's taking out the bottom of this. And then this would be your next wick. And then this one. And you also have the trend line here as well. Okay, we don't trade the trend line, but we use it as a visual. Okay, remember I said that? But you got to keep it in mind because it's been respected in the past. Over the last few days, I already showed that to you. Okay, so we'll see what happens. Let's look at Biogen. Okay, here's Biogen. Gap down to here, sold up to a resistance level, came back, and then shooting star, up and down, down, up, back. Okay, again, sort of following the market's pattern, sort of forming a wedge. See how I'm kind of showing you there? Sort of like a wedge. That's Biogen. CGC, we have not looked at it today. This is a name we looked at in our private session yesterday. This is one of the weed stocks. For folks who don't know, this is in the marijuana sector. All right. Caught some upside movement over a couple of days. Then it sold off. Okay, today, here's where it ended yesterday. It gapped down, sold up. Where did it sell up to? Resistance. Okay, came back down, sold down to the 20, and now it's just below there. Just below there. Also forming a wedge. Look at that. See how these stocks are sort of following the market's lead? Okay, let's look at crowd. Okay, so crowd. All right. Oh, I was going to say, I don't know why my alert didn't go off. Well, that's because the alert would have went off over here. Okay. And yes, this would have been a good one to take to the short side, and look how far it came down. Okay, so from 59.50, it went all the way down to 55.04. But even if your target was 55.93, still got you almost $4. Okay, almost $4. Beautiful. And then yes, 2 days ago, you see how it sold off right into close. Yesterday, yeah, this is what I wanted to point out. Yesterday, it did not get that big ramp like everything else did. See that? Here's how it closed yesterday. And then today it gapped down to here, flushed down to support, back up into this area. Now, I have not corrected or adjusted my zone. Once it's been touched, it's no longer valid anymore because your probabilities go down. All right, so I need to adjust this. Now somebody might say, well, wait a minute, Scott, it is catching a bounce again, and it might, right? It might. The probabilities, though, go down. So let's take a look. And what did I just talk about? We, as traders, we want to only deal with the highest probabilities. Your highest probability is the first touch of a supply or demand zone in combination with some other factors. Okay, and again, I can't go into those on these YouTube live streams because that's stuff I go over with my premium members. That wouldn't be fair to them. The first touch is where it's highly likely, and we did. We got this nice sell-off. Okay, it sold off over $4, but your target probably would have been right here because you see this wick, and this was also the origin of the move. Right here is the origin of the move. Okay, so this level right here probably would have been your target. It made it. It actually got below it, and then it started back up. Okay, so here, if this was extended, it would be touching this level again, right? And it did sell back down a little bit, but it's not as likely. It's not as likely that it's going to sell off here. It might, right? But we only want the highest probability plays. This would have been a high probability trade. This one, not as much. Not as much. Okay? Let's look at Euro GBP for our Forex friends. All right, so we can see Euro GBP is selling off. Okay, see this? Just working its way down. And I'm just trying to look at a couple of things here. Let me squeeze it a little bit tighter. Okay, coming back. All right, there's our low right there, and this is current price right here, black. All right, so right here, I don't have it drawn in, but I'm going to show you. Right here would be a level drawn across that would be an area that would be highly likely for price to catch a bounce. All right, so I'll just draw it in right now. I should say potentially catch a bounce. Okay, so what did we have here? A drop, little bit of a base. This is the only candle that you would consider the base, and then a strong rally away. You'd like to see this candle be bigger, but because we have several medium-sized candles in here, we're going to go ahead and count it. All right, so the best is a gap. The second best is when you get big candles like this, right? If this first candle would have been a big one like this. The third best is when you have several medium-sized candles. And we've got 4 of them in this move away. Okay, so what you would do, from the high of that to the low of the wick, it should be right there. All right, now let me go back. I'm going to show you what I need to do here. Auto zoom, then I got to drag it across. Then I have to drag it across. So it's 8868. I just got to remember that number. Activate. 8868. I'm just going to draw it to about right there. 8868. All right, that's close enough for now. You can always adjust it if you want it to be perfect. You just go in here, and then it would be the bottom is 8868. So if you want it to be perfect, obviously the bottom is not as critical as the top here. All right, so price is working its way down. When it gets here, okay, when it gets here, we'll look at some other factors, and if they all line up, then we would expect to see a strong bounce away. Okay? Hopefully that makes sense to those of you who are watching. Let's just take a look here. I'll go in a little bit closer, and I'll bring the chart up, and we'll set our alert. Our alert needs to be at like 8890. So let me get up here, set the alert, because I want the alert to go off just before it. Okay, so here I would say look to go long, but I won't just go long. That's just telling me that's what I need to look for. And then when it gets here and it trips that alert, I'll look at some other factors and then I'll say either yes or no that it's a high probability trade. I really only want to be in it if I think it's a high probability trade and that I can make some money off of it, right? If the probability is not very high that it's going to get a very big bounce, do I want to take the risk? What is my risk? Okay, if you're trading supply and demand, your risk is going to be, your stop's going to be just on the other side of this zone. All right, so then you take that, and are you going to at least get 3 to 1? Like 3 to 1 would probably be up in here somewhere. And on Forex trades, it's entirely possible to get way more than that. Okay, I was showing somebody the other day, you know, on Forex trades, it's possible if you're taking the right trades to easily get 4 to 1, 5 to 1, 7 to 1, 10 to 1. Okay, so if the factors lined up, I'm going to just give you a little bit and piece here. If the factors that we look at line up, I'm not going to go into that, but if they do, and we think you're going to get a strong bounce out of here, where would we be likely to bounce to? Up in here. Up in here. All right, so 9011 from, what did we say this is? 8889. Okay, I'll do some quick math for you. 9011 minus 889, what did we say it was? 8889. 122 pips. Okay, those are the kind of moves you want to see, right? That would be great. Now, that might not happen in just an hour. That might happen over the course of a day. That might happen over the course of 4 or 5 hours. Okay, but if the factors lined up and we took this bounce and it's telling us, yeah, this is a highly probable trade, this would be my target right in here. That would be my target, and that would be good for about 120, 122 pips. And I already told you, what is a standard lot on that? A standard lot, that'd be $1,200. Half of a lot, $600 on a highly probable trade. Okay, let's look at the market. We got a few more minutes here. If there's anything you guys want me to look at or anybody has any questions, let me know. We're nearing the time that we normally get off here, which is around 11:45 to noon. Just depends on what's going on. Okay, you can see we're still selling down. Not aggressively, right? Not aggressively as of yet. We've got opening price level here. Okay, and look at this. This is another reason we put this in here. Okay, I haven't talked about it much on this particular live stream, but why do I put in the opening price level for these different items that I might consider trading? Okay, it tells us a couple of different things. Number one, if most of the action is below opening price level, we're looking mostly for shorts. Okay, if most of the action is above, we're probably looking mostly for longs. Not necessarily, but you know, again, that's where the price action would be. And look how it acts as support and resistance line. Look at this. Right? That wasn't a level we had drawn in before, but every day opening price is sort of its own level. So that's why we draw it in. And then we remove it at the end of the day, and we draw a new one in for tomorrow. Now on futures, like ES is a future, we have two. We'll have our overnight session. It'll have its own opening price level. Then when we get to regular trading hours, we remove that one and we draw in the new one. And then this one will be for regular trading hours only. But look how it's been respected. Look at this. Okay, that's why it's important to have it on there. Okay, still haven't been able to get below here, but we have an alert set. Let's go back and look at Netflix and Tesla, because those were ones that Sunny was looking at and maybe even trading. Okay, there's Netflix. What did we say before, right? Above this hammer was a good long, a good scalp opportunity. And look, right? So up to here and then up to here are highly probables, and we went way through that. Then it pulled back, okay, and now you'll see what it does from here. And once you've made money on something, right? Once you've made money on something, don't get greedy. Don't get greedy, okay? Unless you find another high probability setup. I'm just telling you, my mind, typically what I do on a lot of names, let's just say this is something that I would have took, right? Okay, from here to here, or maybe up to here, you exit, you get your money, okay? Then I look at other things because I don't want to get caught up. A lot of traders, and this is a bad mistake to make, they start thinking, well, I just made good money on this name. I'm going to make more money on this name. Well, there's thousands of things you could be trading, right? Thousands. Excuse me. My eyes are bothering me. Thousands of things you could be trading. Okay, so if you just made good money here, take it. And unless something else shows up, all right, let's just say this ends right here, as a shooting star. Okay, that's different, right? Then maybe you have a higher probability and you've got some room to come back down to here. Okay, that's different. But I'm saying don't get hung up on a name just because you just made money on it, right? You want to take the best probability setups. All right, we had an alert go off on the market, which I think means we took out the bottom of the candle next to us. Let's look at it. This will be one of the last things we look at today. Yes, we did, right here. Okay, let me get closer for you. Okay, so we just took out the bottom of this candle. Now we already know, we've already identified. What are our potential obstacles? Here and here, and then the trend line only because it's been respected in the recent past. Okay, here, here, and here. Those are your next obstacles if you think that price might be moving lower. Okay? And we've got a little less than 12 minutes to go on this candle. So you're looking to see what it's going to do. Is this something I would have been looking to scalp? Probably not, only because we're still sort of in this range, right? Look at that. If you drew a line up through here, I'll just do it just so you can see it visually. All right, if you just kind of took and drew a line right up through here, see that? We still really haven't broke below that yet. And when we did this earlier, I want to show you again why it's important to let candles close. Okay. Now, technically it did close slightly above it, but even though it blasted up out of here, it came right back down to it. You see that? Okay. But we knew we were going to have some resistance up in here, and sure enough, pushed it right back down. But if we get below here and take that out, that starts giving us some more momentum. You take this out, and now you're looking at this. You get below this, okay, now things start to really, if you're a bear, again, we're not bears or bulls, we're going to trade price action, but if you're a bear, then you start to get excited, right? Because once you start getting down in here, now it starts to become much more likely that you may drop all the way down to this demand zone. Will that happen in, an hour, 2 hours, 3 hours, a day? That you don't know for sure. Okay, but it starts to become more likely if you can get through these things here, get down to here, break and hold this, then it becomes more likely. I mean, our next level, if you break this, isn't down till here. Okay, that's our next support and resistance level, isn't clear down till here. Okay, but as you can see right now, we're still not doing much. Still not doing much. Okay, I'm going to take these lines off here because I don't typically use those. I just was drawing that in for you for a visual. And you see, again, we didn't break. We didn't break there. And that's just trying to give you a visual to let you know, this diagonal up here, it's still being respected. So until you break below there and then take out this wick, that's when you start thinking, okay, now the sellers are starting to get some strength. Now they're starting to push to the downside because now you're in theory getting ready to maybe expand the range. Okay? All right, we're at 11:51 and I have not seen any additional questions, so we'll go ahead and wrap it up for today. I hope you guys got some great value. Check us out at simpletradinglife.com. You can join us in the free chat room, and we also have the premium room. And please, again, make sure to give us 2 thumbs up here and subscribe to the channel and turn on the notifications bell, and you'll be alerted every time we go live. Thank you once again, and hopefully we'll see you in the room. Bye-bye.